everybody? Welcome to the Trading Market Technicals Morning Call video for January 23rd. Another up day. Market continues to grind higher, making new highs. We had 5-year highs again in the S&P. Transports are just out of control to the upside. Everything's chugging along the way it should be if you are a bull in this market, and certainly the markets are saying so. We do our long-term perspective on Mondays, and we have been continuing to say that our longer-term overview of the general market is higher. Long-term trend is higher. Short-term trend right now is higher, but overly extended. And that's something that's a really, really big concern for me as far as building any type of positions. I am looking for markets to continue to grind higher. In order for us to get some sort of a pullback, we will need some sort of a catalyst. I went through a bunch of indicators saying, okay, well, where do we go from here? Do we continue to grind higher? And yes, we can grind higher for quite some time being in an overbought state based on our indicators. It does not matter because it's overbought. We want to start issuing sell signals. We need a trigger. We need to break some pivotal lows on a closing basis in order for us to really start looking to get aggressively short. Now, that does not mean you can't play the short side relative weakness to the market itself, but I just think that playing the market short is really a risky game. You do not want to be looking at pig tops or bottoms for that matter. Let the market tell you what it's doing and just go from there. Right now the trend is up and you should be looking to buy strong stocks. The problem is that the market is so extended. To me personally, I think the risk is a little too high to be building positions up here at this area. Now, the market looks like it wants to head towards 1500. These inverted head and shoulders that I've been pointing out for the last month and a half. And to this day, we've been grinding higher since the new year began, and it's just been a very slow grind for lack of volatility for us traders that trade during the day. There's no volatility, no really true momentum, other than the fact that they gap up higher and they give us one little pullback, and then they kind of move into the grind mode pretty much most of the day. So that's what we dealt with, and that's where you need to look for other ideas and other things. And me personally, I like looking for catalyst. And now that we have earnings season upon us, that's going to be a great reason. Yesterday, not a lot of the stuff that we were looking at was either gapped up or gapped down a little too far, and a little too rich for my trading style. So I look at taking a step, taking a seat back, and you realize that when you're in front of the screens all day, it's a little different than when you're carrying a job, you're working, and you see just the numbers at the end of the day. So it's a little different than that. But nonetheless, we have a real strong trend, whether it be regardless of volume, the trend is higher, and that's going to be based on we had some real good earnings come out. That helped yesterday by Travelers. We had FedEx, we had DuPont, and then last night Google and IBM actually had some strong numbers. Actually, Google less anticipated. They were a little bit light on the revenue, but nonetheless the markets liked it. Google was up like 33 points after hours yesterday. Today is going to be Apple after the close, and Apple is going to be really interesting to see what happens with Apple. And I really, honestly, I don't trade earnings. I don't trade into earnings at all. If the earnings is going to come out, let it come out, and then let us decide if we are going to trade it or not. So please, if you're holding it, use caution, or maybe you might want to hedge yourself. Speaking of hedges, I just got a couple of emails, actually several emails about if we are going to hedge. What do you think about buying, the VIX, VXX, the UVXY, or the TVIX? And I say stay away. Do not buy that type of instrument, because you're buying a derivative on a derivative, and if the market does not go your way relatively quick in the next day or so of your purchase of the VIX derivative, then you're just going to deteriorate your investment, and that's something that I do not trade. If I'm looking to do anything, I'm buying spider puts. I'm buying an inverse ETF. So you're buying it to be short, but Don't trade those instruments. I think it's just a waste of time and a lot of money if you're holding it, because it's going to take a major move to the downside for a big spike on those instruments. Again, unless you caught them in the first day, 2 or maybe 3, but stay away from buying the VIX derivatives, because it just makes no sense at all. They erode over time, and with the grind what we have now, a lot of people are probably underwater and not going to really see where they purchased it. So please stay away from that. We have a couple of decent economic data coming out. We got retail sales, the Redbook retail sales, November housing price index. That's going to be a pretty much of a market mover. And then of course we have our crude inventories come out at around 10:30 today. So again, use caution if you are long. Check your economic calendar and definitely check your earnings calendar to see what you're holding into earnings here. You might not want to be holding anything relative to that. Real quick on the Dow Jones, we're up 62, Nasdaq up 8, S&P up 6. So real good, green across the board yesterday. And again, very quiet. If you were to see and sit in front of the markets all day, you'll get what I'm talking about. Very quiet. Obviously, can't stay this way for that long. I'm looking for some sort of risk off very shortly, and I'm hoping something happens sooner than later, actually, because it's getting a little boring. But anyway, let's take a look at the charts. And I did something else today that I like looking at when we're so overbought, and I want to see, well, wait a minute, what's going to be our trigger here to look to get short, because there's no question we're going to short the market when the market does end up trying to roll over here. And I like looking at relative weakness to the market, or a big gap up play that's way overextended, and then looking to fade that, because obviously many people are going to be taking profits, and that's going to be probably an easier bet. But that's also for more of the intermediate and advanced traders. So really just keep an eye on that. Keep that in mind. All right, so we have the NYMO, right? We have the McClellan oscillator. We're back up to the 50. We had a nice little pop up here. Again, still not overbought, excuse me. We need to be up above 60, 70 area before the market in itself as a whole would be overbought. Now, I showed you many indicators yesterday. I'm not going to go through them again. They're just even worse than what they were. I got a couple I'm just going to show you, but I wanted to just make that point. The NYMO here, still room to run before we really start getting stretched overly bought. Let's take a look at the percentage. NASDAQ hot record high, again still at 100, can't get any higher than that. We've been this way all through January, so this is something to take a look at. You can see how extremely overbought we are, but again, that is not a sell signal. S&P to the 50, now we're back above this range here, this overbought range at 93%. Okay, we're almost close to 100%. And this is another thing I wanted to show you. And I put this in perspective. I opened the chart up again, and you can see from here 434% up high. Look at where we are from back at 2009, 2008. We're up at these levels again. Really high levels, high readings. Again, gives you a warning sign. Use caution. Back again here, new highs reaching at these levels, and look what happens when we get up to these areas here. So just again, a word of caution. This is not issuing a sell signal to the market. I'm just saying here we have a red flag. When the market rolls over and breaks support, I will be telling you in a video that to me I will be issuing a sell signal in the market. But as of right now, market's still grinding higher. Trend is still up to the upside. Okay, and I mentioned yesterday, or maybe a couple of days ago, about the yields. Now here's a TNX. Here's a 10-year Treasury note yield. And I opened this chart up as well from 1994. You could see that this has been in a bear market for in the early 80s, so 30 years. Now, if I excuse me, if I opened up the 10-year yield closer to UST 10-year, you notice that we broke out of a symmetrical triangle we're holding above there. Now, this could take some time, but this is going to be one catalyst for the markets to start rolling over once the yields start to rise. And again, this is going to be the bond market is heavily manipulated by the government, buying mortgage-backed securities and bonds, treasuries to bring the rates down. So this is going to take some time, but this is definitely something you want to continue to monitor, at least on a weekly basis, to see if the yields start to rise. And that's something that I will be keeping an eye on as well. Okay, so let's take a look at the quickly the CBOE. Did get a spike up into the neutral territory. Looks like that we have been getting some put buying here in the put call ratio in the CPC. So looks like people starting to be a little more wiser and saying, hey, let me start covering this because this is getting a little out of hand, which it really is, to the upside. Take a look at the VIX. VIX, no change. Another big red candle down, broke area of support, 1229. I don't think I've ever seen a VIX at 1229 in my career. But again, just keep in mind, I'm just trying to keep everything in perspective. If the market is up in the morning and the market continues to grind, and we have our moving averages here on a bullish configuration, you'd want to be looking to buy strong stocks on pullbacks. There's no question. That'll keep it simple instead of trying to fight the trend. Okay. Now, what I did as far as I wanted to show you the world markets. And I said, okay, all our indicators are bought. We're overbought. Our indexes are screaming to the upside. We continue to grind higher. So we do have our indicators, which are lagging to price, right? Let's see what else is going on over the world. Now, I showed you the ratio charts of all of the 5 sectors that we follow, and they're all screaming to the upside. The leaders are leading. The Russell's leading. NASDAQ starting to pick up a little bit of steam. And, of course, the transports are our leader who's taking everything else higher. So let's take a look at the world markets. And here, as you can see here, they plot this on the line chart. They don't have candlesticks, unfortunately. But we have our 8, 20, 50, and our 200. Bullish configuration on the moving averages. But look what's happening up top here. Little bit starting to curl over. We are definitely overbought in our RSI and our stochastics. And here's the ratio chart. Here's what I want to show you here. We're actually losing momentum against the S&P on the world indices. So this is something that I really want you to keep an eye on, and this is what I will be keeping an eye on. And here's our performance chart as well. And as you can see here, German DAX here, the big leader. And if you look back in here, this corner here, which I'll get out of the way, you see that we're starting to roll over a little bit. Here is the Nikkei, exactly the same thing, starting to roll back down here. And then, of course, here we have our French CAC starting to roll. Not as strong as the German DAX and the Nikkei, but starting to really roll here. And our S&P is going to be in red, as you can see here. And then we have our FTSE down below. And, of course, the Shanghai lagging this whole move up, as you noticed. And Shanghai actually really bottomed way before the S&P did back in 2009. But again, relationships do change, and obviously this is the biggest lagger out of all of them. But world markets here way up over the top, and they have rolled. If you could really take a look at these at the ends here, I know it's a little difficult. Rolled, Nikkei starting to roll. Now our S&P is straight up, and then we have our French CAC here actually starting to roll as well. And then London FTSE here, a little bit of a lagger from the European currencies, European indexes. So just something to keep an eye on. Still a little bit early, but I just wanted to kind of fun to show you guys. All right, Spider's breaking out again, testing this upper end of his line, and let's see if we can just right there. A test up of here would get us to that 151 on an inverted head and shoulders. I do think that we're a little bit on the couple points here. There's no reason why we can't touch that or get close to it. Okay, volume was light on Tuesday, but again, overbought readings on both our MACD and stochastic. Same thing with the Spiders. The S&P cash. Our CCI starting to break above 100. I like to see that. We had a little bit of a wedge, broke out of the wedge, so this is non-existent, and we are breaking higher. So again, guys, inverted head and shoulders here working out. All of the inverted head and shoulders starting to play out. 60-minute S&P cash. We started back up above, breaking back above our 90. Now our overbought readings are starting to come into play again. And just quickly in the overnight, S&P down 2 handles, really unchanged or nothing. Very, very quiet in the overnight session. Actually, I'm surprised. A lot of the currencies in the last 16, 15 days, actually, since the beginning of of January have been extremely quiet, which tells me that I think there's going to be a major move, whether it be a continuation to the upside or to the downside. But a lot of these risk currencies are at extreme levels, and I would think that the next step would be a push lower to the downside. But anyway, we need a catalyst for that, and until that happens, we continue to grind higher. Nice little channel to the upside. Lower trend line here. I'd like to see a 1472, 1470. Call it 1470. 1470 break on a closing basis would really get us at least a pullback. And again, we could pull back anywhere from 3 to 4%, and this market would still be bullish. Bollinger Bands, 30-minute S&P cash broke out again, as you can see here, and now chugging along higher again. But as you can, we've been really consolidating, and now the last 2 days we just kind of moved up higher here. And let's take a look at our diamonds. That's the Dow Jones ETF, broke out of this consolidation area, closed up just slightly above it, and look at our MACD and stochastics again, way overboard here. Okay. Take a look at the transports. Now, the transports is incredible. I had mentioned here back in November, I said, well, we're getting into the season where seasonality would be, the strength would be for the transportation sector to start really picking up steam. Sure enough, we pierced it, false breakout, big, nice reversal candle, broke back up higher and never saw it. We pulled back once, we bull flagged twice, right above this large symmetrical triangle, which I showed you, and then we gapped up from the fiscal cliff resolution on the second, and then that was it. We've continued to go higher, and I mean, this is really now getting a little bit stretched here at 98, 99. A lot of these markets are reading 98, 99 in our stochastics. Same thing here with the IWMs, but again, that's what you want to see. You want to see the Russell, and you want to see NASDAQ, and you want to see the transports leading the S&P, and of course the Dow. But constructive here, just risk reward. I wouldn't want to be looking to buy new positions up in here. Inverted head and shoulders, 89.50 is the target. We're literally 30 cents away. Probably hit that today. So these inverted head and shoulders that I've been showing you for the last 2 months have played out. But a lot of the reason why we went really sideways, and we gapped up here on the first, not even a pullback. So it was really difficult to either play this or unless you looked at this area here and said, I'm going to look to buy it here with a stop down below. But really, a lot of the indicators at that time really never really came together saying, hey, look, you know what, we do have some strength to the upside. But once that gap happened on the second, there you go. All right, Apple. Apple got above the horizontal line up in here. We're still, there's got this head and shoulders pattern on the lower, which I'm really not so fond about down here. But although it did break down to the 482 when I initiated that head and shoulders pattern, 460-ish, 470 would be the test. So let's see what happens here tonight after the close. That's going to be something very interesting that I'll be reading to see what happens. Verizon had some good numbers, so I would expect some real good numbers out of Apple, but it's just really how the herd, the crowd mentality is going to really play it. Are they going to really run this up higher, or are they going to, are they just going to sell on the news to just try to get out? Because a lot of people got caught up in here, so that's something that really need to think about. Lastly is the Qs, kind of sideways here, definitely the lagger of the 5. Right now, because of Apple, the Qs will decouple eventually. All right, guys, that's really about it. Let's see what happens today, Apple after hours, and be interested to see if this market can continue to grind higher or if we can get some sort of a pullback to really enter the markets. Have a great day. Be safe out there. Use your stops, and we will talk to you tomorrow. Take care.